Now, the average home loan across New Zealand has passed the $500,000 mark, with 117,000 home loans looking at over a million. The latest data from credit reporting company Centrix also shows the rise comes in part as a result of the increase in the size of the average first home buyer loan, which is nearing the peak it last scaled in 2022 during a buying boom, remember, that was fueled by low mortgage rates. The average home loan does differ. The big centres look a little bit different. Auckland, 700,000. Wellington, 569,000. And Hamilton, 535,000. The most affordable of the country's large cities is Christchurch, 427,000, posing particular challenges for younger buyers in the market. And while mortgage arrears have improved slightly, nearly 500,000 people are behind on some payments, like personal loans or bills. The average borrower is now nearly 50 years old, and the average mortgage-free age is creeping towards 68. People are starting to rethink the old standard home loan model. Centrix Managing Director is Keith McLaughlin, and he joins me now. Very good morning, Keith. Lovely to talk to you.
Good morning. And you.
So the average home loan, 500,000, just passed. And I have said a few times that I thought as a nation we'd long passed that. But what's the major factors that are driving the loans up, Keith?
Well, I think it really came off the back of, they have been, to be fair, they've been trending up quite regularly since back in 2019 at 367,000 was the average size. Yeah. And every year from there on, it sort of crept up to just over that $500,000 mark. And I think it does tend to follow the price of housing, although that's been quite flat for the last couple of years. Houses that have sold are still selling for a reasonable price. And I think that really is what is driving up the mortgages. It's a reflection of what happens in the property market.
Yeah. We've got quite a large number sitting above the $1 million mortgage mark as well. Is this a byproduct of the historic low mortgage rates that we all enjoyed, 4 or 5 years ago?
Yes, look, I think, a lot of people climbed into property when property was quite expensive, but interest rates were quite low. Yeah. And I think when you look at the $1 million mortgages, 61.7% of those are in the Auckland area. So it's largely driven by what's been going on in the Auckland market. And then you drop down to 9.1% in Wellington, 3.9% in Christchurch, and 2.7% in Hamilton. So it certainly is driven by the Auckland property market.
What about the first home buyers? Are they borrowing more than ever before? How are they managing with these rising loan sizes?
Well, they've got to keep up with what's going on in the marketplace. So yes, they're having to borrow more than they have in the past. And I think when you look at the average first home buyer, that again has followed the trend of across the board. So yes, first home mortgage size at the moment is about 586,000 for a first home buyer.
Those figures, though, I'm not saying they're skewed, figures are figures, but, when you say first home buyer looking at 580,000, the first home buyer, though, could be someone in their 40s or late 30s. We always say first home buyer, we think, it's someone straight out of...
25, 26 years.
Yeah, but it could be someone buying their home later in life on a
absolutely.
Good, better wicket,
Yeah, and people returning to New Zealand from overseas, they may have gone overseas to university and come back. So, it's not age calibrated whatsoever. It's really just, it's information that we pull off the New Zealand banks who upload data to us on a monthly basis. So, it's a data extract. It's not a demographic breakdown.
Yeah. Hey, I see, Keith, that Christchurch is the most affordable of the big cities. And again, that was surprising to me considering the growth that they've had over the years. I go semi-regularly. My family lives down there now, my sisters. And I think it's such a fantastic city and still affordable, it seems.
Yeah, I think I'm not an expert on demographics, but I certainly think in Christchurch you tend to see the place growing outwards more than upwards. And I think the availability of land on the outskirts of Christchurch itself has probably done something to keep the price of the houses a little lower. If you look north out towards Rangiora and then you look south, there is still quite a lot of spreading of Christchurch itself.
You mentioned mortgage arrears are improving a bit. What's changed recently that's helped people catch up on their payments?
Well, I think what we're starting to see very slowly is the impact of the reduction in the interest rates. It took a little while for New Zealand householders to actually balance their books and adjust their spending, take out the discretionary spending, focus on maintaining the currency of their things like power, rates, insurances, which have really hit them. But we are starting to see the slow impact of the reduction of interest rates. And I think it's about 79% of New Zealand households will have their interest rates reviewed over the next 12 months. So that trend should continue, provided we don't see any more spike in the things like say insurances and rates and things of that nature.
Oh, yes. I think what was quite I think a little to be concerned about is the data that showed that many wouldn't be mortgage free until, like their late 60s. I mean, that's a big deal, Keith, for people's financial well-being and retirement plans, isn't it?
Yes, well, I think, I'm probably in that age group, and I think what we're continuing to find is people are working longer. They are using the equity in their property to do things like renovations, to buy assets like new cars or boats or whatever. And I think the cheapest access to funds is obviously the home mortgage. So I think a lot of that really is a lifestyle choice for those who've got the equity in their property.
Okay, that's interesting. I thought maybe, maybe some families kind of got that way, they remortgaged their houses to help their kids, like get into their first house. There was a lot
I think there's an element of that,
mum
and also
dad.
matrimonial issues arise at different stages in life, and I think that creates a different lifestyle. So I think it's a combination of all those things, but I don't think it's people largely getting into mortgages at the age of 30, 35, and then the status quo remains and they're still paying them off at 68. I think it's a change of thinking as much as anything else.
Hey, so finally, do you see people questioning what is the standard way of getting a mortgage and paying it off? Are there alternative strategies that are becoming more popular?
Look, I think it varies on personal circumstances. I still think that the standard, I'm not a banker, but I certainly think the standard principal and interest over a term loan, and then having the flexibility to pay some of that off in lump sums as and when you can afford to. I think that still is the way to go. I don't think reverse mortgages have really taken off to the extent that perhaps they could have, where somebody who has a lot of equity in their property decides that they're actually going to start to use some of that equity to enjoy their lifestyle. I think that may come in as the economy tightens if it continues to do so, but I think it's really the traditional P&I, 2-year, 3-year term loans that are out there.
Do you know much about that reverse mortgage idea, Keith? How it works?
Not a lot. Look, I think what it does do is if you're an elderly person and you don't have the income that you would like to have to support your lifestyle, then you can start to draw down on the equity in your property. And when the time comes to sell a property, then the lender gets paid back principal and interest at that stage.
Yeah, so you end up probably with nothing because you've spent it.
It depends. Look at the price of houses. I would imagine there's quite a lot of pent-up equity in those homes at the moment.
That's true. Well, interesting figures, Keith, and I appreciate your time this morning. That is Keith McLaughlin, who is the Managing Director of Centrix.